Okay, good afternoon, everybody. Today is Friday, September 15th. It is 1:05 p.m. Pacific time. The market just closed 5 minutes ago. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. I don't give buy, sell, hold ideas, recommendations. Our sweet spot, our circle of competence is research and education. Excuse me, I feel like I'm losing my voice a little bit. I apologize. Oh, okay. Thank you. We'll go through market thoughts, industry groups, stocks to watch. I have a lot of those, and then the quote of the week. So just one single slide updated a few days ago. The index return. So 2.4 is that the Magnificent Seven right there, up 66%. The S&P up 17. The remaining 493 up 5%. Does that mean the market has to go down? No. Does that mean that the other ones have to catch up? No. But usually what you see these like what they call alligator jaws, where things that are normally correlated become uncorrelated, and eventually those alligator jaws slam shut. And it's just a matter of when. And most likely it'll be the big boys coming down and the other ones either going sideways or going up a little bit. It's hard to see them going up a lot if Tesla and Nvidia and Microsoft are going down, but you get the idea. This should close shut at some point. I don't know, a week, a day. Maybe it started today. Today was a lousy day on the market, that's for sure. A month, a year from now, it's just impossible to know. And that's where people tend to get themselves in trouble if they trade like, reversion to the mean strategies, because, the old famous saying, the market can stay irrational longer than you can stay solvent. So long-term capital is the perfect example. Their strategy worked. It worked really, really well. And if they had been able to survive the storm that they were in 1998, they all their positions would have come back. They'd have been fine, but they couldn't survive. They got a margin call and got taken out. So let's look at. I think that's it. Yeah. So let's look at the indexes. I'm going to turn my camera off because I know it's sometimes you can't see the right side of the chart if my camera is on. And you should see a chart of the NASDAQ composite. Today was a triple witching, I think, so that will explain the big volume day. Basically, what triple witching is do a Google search for I butcher it, but all a convergence of the options are all expire today. So a lot of options are expiring today. So it creates a big volume footprint. Like I said, it wasn't much of a day. I don't know if there was any kind of economic news or anything. Honestly, I don't really look too much at that. The bottom line is the price action, and it wasn't very good. So we're right below the 50-day again, and it will, I guess it depends on if you're bullish. You might see like a potential cup with handle here, and if you're bearish, you might see a head and shoulders top right here. So you have to be careful, because if you have a bias or a leaning one way or the other, you'll see what you want to see. And I've been talking about the head and shoulders for a long time, and admittedly, I tend to get bearish or nervous or more protective much faster than the normal trader out there, than normal investors. So keep that in mind. But I've been looking at this for a number of weeks here, and it's bothered me. It looks like a head and shoulders to me. Here's the neckline. And when it broke that neckline here, it was a little too obvious. The first one, or no, I'm thinking of Fang under. Yeah. So I remember talking about like this was the head and shoulders. and this was just too soon. And if that was the case, this was the neckline break. And, maybe you could have made a little bit of money selling that, but it didn't work. And that was what my fear was. So on the NASDAQ, my fear meaning if you were positioned short, you're going to get run over. So on the NASDAQ, if you saw this as a head and shoulders and had some kind of neckline, I don't know where you would draw it. I don't think you would have, there would have been any trade there in the NASDAQ, to be honest with you. The FANG triple up had some type of, quasi faux head and shoulders, but this looks more constructive, or if you're bullish, it should have you a little weary, because this looks like a head and shoulders top. And then you could draw, like I had like a little trend line like that went off early this morning, probably a little steep. The jury's still out. If we undercut those lows, I would think that they were probably headed to the 200-day, or maybe a test of that breakout, which is way down there. It's hard to know for sure, but I will admit that I'm, in 20 years ago, I'd be pedaling metal short right here on a day like today. I'd have been just piling into the short side on a day like today. A Friday almost always would lead to a poor Monday, at least a poor open. Worst case, if you're short, you get a chance to get out. I don't know if it's me. I don't have the stomach for it anymore. The market, I feel like, has changed a little bit, but I am short. I am net short, but not pedal to the metal enough that I can withstand, if they try to open it on Monday a little bit stronger than, just to shake the tree on the short side. Let's look at the S&P. So holding up a little bit better, but it's kind of the same thing. And there's always an or, right? Let's play the other side of it. Cup with handle. If this is a cup with handle, you're going to get what? Upside prices. So you'll get some kind of move up. And I think for at least for me, I'm going to wait for that confirmation before I start getting a little bit more bullish. The leadership is lagging, and we'll go through the leadership for sure today. But we either need new leadership, or the market is going to be in a correction. The Dow, should we look at that just in case? I don't know. I don't know what to make of the Dow. Very rarely trade it. How about the Russell, which is a little bit more broad, not all that great. So bottom line is, I think IBD went to marketing in under pressure a while ago. And I talked about the percentages, which is much more, tells a better story than just the three items that they have: uptrend, correction, pressure. So I think they were at 20 to 40. They went to 40 to 60. I'm certain if whatever they were at, they're going to drop a notch after today's action. I can guarantee you that. I just know how those guys look at the market, how they think. So they'll be down to probably the minimum exposure. If the minimum is, I don't know if the minimum is 0 to 20 or 20 to 40, but it'll be lower for sure. A notch, I'm sure. I don't know if they'll go full correction. That probably unlikely. I think a correction would be 0 to 20 exposure. So I think they were at 40 to 60. They'll go to 20 to 40. Okay, let's look at the industry groups. Do I have anything else about the market? How about we haven't talked about bonds all that much. Let's look at TLT. Just a total dud. Nothing. Can't go up. Not exactly blowing up, but it's just a dud. Is it TY? I should have these. I should have these handy. And the longer that that the interest rates stay up here, the more the market kind of gets used to that. But boy, look at that. If that was a stock, what would you think? Big, huge base, the pivot up there broke out at 40.85. I don't know. That looks pretty bullish for interest rates going up. Bullish for interest rates going up. So that's not exactly. I don't know. I don't know how to interpret the interest rates versus the market anymore. I think the market's trying to look past all of that. All right, let's go to the industry groups. I'm sorry. Yes, the industry groups. Computer peripheral hardware is number one still. And that doesn't look all that great, right? So if that's your best group, what does that tell you? Now, it's the best group for a reason because it's made a huge move. SMCI, Dell Computer. But yeah, I have a feeling in 5 to 9 weeks, this will no longer be the number one group. Oil and gas machinery equipment, that looks okay. So you've got some really good stocks there. And oil, I think, was maybe $90 a barrel today. Oil and gas field services, another great group. Tidewater, energy coal. This one really hurts. And I'll look at AMR. I've missed a couple of big trades this year. I don't know why. I don't know why. I normally wouldn't miss them. I would have mishandled them, if that makes sense. So I would have bought them, but just cut them loose too quickly. I have to go back and kind of think about this, but I'll look at a couple of CEIX, AMR. I like those setups. I like the way they made huge moves and held and build big bases. And it wasn't there for the move. So energy, coal, commercial services, oil and gas drilling looks okay. Insurance life would not be my favorite group. Pretty defensive probably. Steel specialty alloys is a good group. CRS. We'll look at that one. I think that's in that group. Oil and gas, banks, food, dairy. You get the idea. So energy, a little bit of commodity. There's no software. There's semiconductors are falling off. You still have the peripheral equipment hanging on by a thread. Not the very growthiest, the very can-slimish type of group action. Okay, so the main event. Let's start with the big boys. So I got a lot of stocks here, so we're gonna go pretty fast. NVIDIA. I don't know if I talked about it on the video last week. Sometimes I forget what I say in the video versus what I say on IMD Live, but to me, the third time or the fourth time, depending on how you interpret it. If you counted that as 1, 2, 3, this is the fourth time. I didn't count that one. I counted it here, 1, 2, and 3. And to me, the third time's not the charm. So I am not, nor have been in NVIDIA in a number of days to weeks. I wouldn't go weeks. I think I got out of NVIDIA here. If not there, for sure there. In fact, I'm synthetically short the thing a little bit, which is very strange to me, but I'm short the FANGU, FNGU, and it's got a 10% weighting in NVIDIA. So it is what it is. It looks like it's not going to hold this. I would love a little break below the 403. That would be an awesome shakeout over a number of days to weeks. I don't know if the market's going to do that. In fact, I can tell you that I'm going to draw a trend line like that. And if NVIDIA breaks through that and then comes back up through it, I might try a long like that. It worked for me for VRT and a couple of others. So for VRT, I had it like that. And on that blue day, or this day, the alert went off there on 8/17. Here, let's go ahead and walk you through it. And I'll only do this with the strongest names that I just absolutely really love and really want to own. So I drew a trend line like that. The alert goes off that day. Once the alert goes off, then I'll reactivate it. And then the very next day, boom, it goes back up. I didn't have this other one down there. You can ignore that one. And that's how I'll buy it. And that's what I'll do for the strongest names that I love. And then I sold at the new highs somewhere. I don't remember where, but I got a little nervous that VRT's correlated with NVIDIA. So I thought that it would go down when NVIDIA started to look a little weak. It actually hasn't. This one has held up really, really well. 2 points off the high. Let's look at the weekly. You've got the closing range of 56% this week. This stock is acting great. It's acting great. I hope that we can get a base or something. I'd love to get some kind of base to consider the stock again. But back to NVIDIA, that's I think there's like 60% probability that it breaks this trend line. 40% that it doesn't. If it breaks the trend line, then I think there's probably like 70% probability you get a snapback back up through it that you probably could make some money on, and maybe even a chance that that's the low and it runs. I won't handle it that way. I will sell it if that were to happen. I think if it were to do something like that, I would be a seller, but it is the leader in the market, which is what's gotten me a little bit negged out on the market in the last number of weeks here because it's not participating. It's very subtle. And as a short-term trader, these are signs that I use. But I remember that day, stock opened up like 4 or 5 or was up 4 or 5 in the pre-market and then couldn't go up. And then the next day, the market was okay and the stock couldn't go up either. It was up 39 cents. And this day, I think the stock opened up a little bit higher, maybe somewhere in here, but it just couldn't hold the opens. So here's, this is 7 a.m. Boom. This is 10 a.m. Eastern, which is 7 a.m. for me, right? Can't hold the open. Is that right? Am I getting these numbers right? 10 a.m. Eastern. Yeah. So those 2 days kind of spooked me a little bit. Not that I want to sell them up 5, but I don't like the fact that it gives back all that move so fast. All right. So NVIDIA, I'm sure everybody's watching, definite barometer. VRT acting great. Cell H acting okay. You have tiniest of bad days today, but overall, great leadership in this one. And Tesla is actually acting okay. Actually, a little bit better than okay. Today, stock didn't really want to go down. It was only down $1.50. I am not short Tesla, but I am, I guess, synthetically short it because it is in the FNGU. I don't have any desire to be short it. It doesn't look like it wants to go down. I've got this trend line here. So if it breaks that, I might consider it. But right now, no interest. It looks okay. It looks good. It's holding up better than NVIDIA, at least in the very, very short term. Apple, we've got to look at that. Too many A's. So I think Apple is broken. Now it is Apple, so I don't think how much downside does it have? I don't know. I don't know if it's worth it being short Apple versus something else that might go down more if you're right, like an AMD. But Apple doesn't look very good. It looks a little tired at best. AMD is not acting well. So it tried to break out and then it just can't get above this 50-day. So that looks very, very tired. And you had the ARM IPO today or yesterday, I should say. And the market tried to rally on that news. And then ARM actually opened much higher today, which is interesting. Let me go to like the 30-minute. So it gapped up this morning, but then couldn't hold, weakness in the market. If you're shorter term, watch these little short term trades. Like I used to watch that when I was trading. That's a really good breakout. He's ran from 60 to 69 in less than a session, half of a session yesterday, half of a session today, but then it's giving it all back. If you, I'll just give you my 2 cents. You trade something like this, that's fine, but you really want to be a seller. I wouldn't use a signal like this to own for 6 months. But this is another one that will be key to the overall health of the market. What else? Oh, SMH, which is the semiconductor index. So you've got this cup with handle. I think this is going to turn off after today's action. The cup is 11% deep, and the handle before today was 6%. So you've got 11% cup with a 9% handle now. That's not much of a cup with handle. I think that'll turn off. This looks tired. Look at the RS line. Not quite making new lows in last 6 months, but very close, very close. The last time the RS line was this low, the stock was around 146-ish. And you can see over here, it just doesn't look good. It looks like there's distribution in this group. AMD, obviously, LRCX today broke down. NVIDIA, obviously. So it looks like this group might be a little tired. This is all stuff you should be watching to help you get an overall feel for the market. All right, let's get away from technology a little bit. I did SLH, I did VRT. Let's look at home builders, because I think they look tired as well. Although this is pretty good action, Lennar. It's not a great report. Stock gap down, undercut the low, but closed still down, but near the highs. Let's see what PHM did. Pulte and Toll. So not terrible. They look tired a little bit, but this is one that I've been short. It's probably, in all honesty, it feels like I'm a little too soon to shorting these. So I'm more of a hit and run short with these, as far as like some big secular theme that might happen. It's probably way too soon. But home builders are a great tell for the overall market, because they've been leadership too. The leadership was the Magnificent Seven, but quietly under the radar, home builders were great leading stocks. Okay, CRS, which is specialty alloys, what that do? So yeah, a little bit of a reversal. So I know David Ryan was on IBD Live talking about it here. He bought it somewhere. I hate to speak for him. I think it was here, but I know he owned it, and he was taking some off into that move up, which is what I would have done if I had been in the darn thing. AMR, which is this one hurts. So I just kind of got wore out watching it. So when they make these huge moves and then go sideways for a long, long time, they just doesn't want to give back that gain. And the other thing that's nice about this is you can see how, so it's 40, this is 44%. This move down is probably about 2/3 of that. So let's say 30. This move down is probably about 80% of that 30, 25. This move down probably about the same. Then look at this move down. So you see how it just kept getting the contraction. I don't know if this qualifies as one of Mark Minervini's VCP. I don't think it does, but the idea is that it's tightening up. It's going down less and less each time, and that was exactly where I should have bought it, but I just kind of lost sight of it. But so that one, and CEIX did really well. It came out of this cup with handle. That was another one that I was interested in stalking, and I just wasn't there for the big move. But what does that say about the market when coal stock breaks out and it's up 40% in 8 weeks? AMR is up 32% in 6 weeks, but really about 40% from that pivot. And so quietly, the leadership is changing. Last but not least, let's look at the other great leadership. So Lilly, and I talked about this, the trend line, and it finally turned down a little bit, but it just looks a little bit climactic, a little bit frothy. And NVO, I know they're going to do a split very soon here. I can't remember if it's a 2-to-1 or 3-for-1, but try to rally out of that and it's come back down. So uh, probably a lot to do with the market. So those are the stocks that I watch for leadership and the ones that I've missed. And there's some other stuff in there that you probably should watch, but a lot of you probably have these stocks high on your radar. I'm looking at my screen to see if there's anything that I totally, oh, I know what I want to talk about that I totally missed. Uranium is going crazy. So it goes. Sometimes if you have a thesis, you just have to be patient. Coal, I should have been patient. Should have been more patient. Don't give up. Don't give up. Don't give up. Wait for that right moment. With uranium, it's been that way for me for sure. So it's finally starting to work. This little breakout here is doing really well. I own UEC. I so desperately wanted to sell it today and didn't. I'm trying to hold on to it. I feel like it's going to pull back on me for sure. It's so hard for me to not sell, but I didn't. I'm going to hold on to that. And I own the Uranium Trust, which unfortunately we don't have in Marcus Smith, but I hope to get that added. It's the ticker is SRUUF, as in Frank, and that tracks the price of the element directly. Sprott, physical uranium, I think is what it's called. So, and I've owned this one, but I did sell this one a few days ago. The Uranium Juniors breaking out here. I wouldn't buy this big cup. Let's hope it builds a handle, and you might have a second shot. So, uranium looks very strong, acting very well. Extended for sure. CCJ, another one that I was in and just kind of lost patience with right through here, because it pulled back to the pivot. And you sometimes just have to, maybe I sell some of it, but just don't get completely out is really the name of the game. Probably if I owned your CCJ, I would be a seller of some today for sure. That looks like it's short term, a little bit tired. So, all right. So I guess we can jump to the quote of the week. I had a couple of quotes I wanted to do. I almost gave you two, but then I feel like maybe I'll just keep one for tomorrow or next week, I should say. And it goes to that whole Head and Shoulders top or cup with handle on the indexes. And it reminded me of this quote from Ed Seykota. So you believe something, then you see it. All right. So if I believe that the market should go down, then I see a Head and Shoulders. If I believe that the market's going to rally, then I see a cup of handle. So you have to kind of understand that what you see is probably what you believe first, not the other way around, right? Seeing is believing is the old adage. It's not the same thing in the stock market. So if you believe something, you'll tend to see it. So if you love Tesla cars, the Tesla bros, they can find every reason why the stock should go up. If they cut production, they're going to put all the other, they lower prices, they'll put all the other car companies out of business, therefore bullish for Tesla. If they raise prices, margins are going to go up, therefore bullish Tesla. And I'm just picking Tesla because it's easy stock to pick on in that regard. And and both things are sort of right and both things are sort of wrong, but basically what they believe they see, and you can spin it any way you want. So you have to be careful. And I fight this all the time with myself. So I'm always constantly trying to be aware of what I think is supposed to happen, and therefore is it coloring my analysis. So that's why I don't like the news today. If there was any macro news or employment news or CPI news, I don't really want to know, because then it might color my analysis with just watching what the market's doing today. So the easiest thing is just watch what it's doing and interpret it that way. It's not perfect, of course. There'll be some head fakes, but it's the best that we have. So you believe something, then you see it. Think about that, the order of operations there. Ed Sakota was featured in Market Wizards. I don't know if this is a quote from Market Wizards or not, but I know it's I know it's an Ed Sakota quote because I have a picture of him on my desk with that quote. That's why it was easy to go to, as a reminder to myself that am I bearish because I want to be bearish, or because I think I should be, or vice versa? Am I bullish because I think that the market is telling me to be bullish, or is it because I want to be, and so on and so forth? All right. Marcus Smith at investors.com, 800-424-9033. We will see you guys all next week. Oh, on Wednesday next week, 1:15 Pacific time, right after the close, we've got our webinar with Mark Minervini. I'm sure all of you are probably aware of that, but just in case, free webinar, Mark Minervini, on Wednesday, the 20th at 1:15 Pacific time. Have a great weekend, everybody. Bye-bye.